You say it's about businesses. Support must be going to businesses first.
Yes, exactly, Haslinda. That this is a very different type of crisis from the ones that we've seen in the past, where recessions and even the Asian crisis you could take as being a downturn in demand. This is really a government-mandated cessation of business. And while governments are forcing businesses to lock down and people to stay at home, then basically it's incumbent on them to basically support the businesses themselves, not to support demand. They've really got to cut taxes, cut business rates, cut rents, actually pay wages, and restructure debt. That's all that they can do.
Jim, just going to have a question for you a second, but just going to get to Scott Morrison, who's been talking there in the Australian capital, Canberra, just talking about what's going on with the banks here, saying currently that we have a situation here where the businesses have been frustrated with bridging finance, and banks need to improve financing turnaround times here as well. Jim, is that a problem, do you think, elsewhere, and does it matter?
Yeah, it matters, Rish, because, of course, given that businesses can't do any business at the moment, they really need the banking sector to step up and effectively delay interest payments, delay principal payments, restructure loans if required. But at the same time, it's no use the government turning around and saying this is all the bank's problem, because they've got to backstop the banks. The businesses and the banks have been put in this position by government lockdowns. Now, I'm not saying that the lockdowns are wrong. All I'm saying is that they have no choice in these matters. Therefore, the buck stops with the government.
Isn't it the case, Jim? Isn't it the case, Jim? I mean, this is the big problem, is it not? Because they need to keep cash for solvency reasons and various other reasons here as well, and therefore they don't start to lend the money out, and this becomes a sort of self-fulfilling prophecy at the end of the day.
That's absolutely right as well. The regulatory conditions around the banking sector at the moment, given what happened in the run-up to the financial crisis and what has been put in place since, really don't support conditions like these. As I say, when business stops and the banks are being asked by every business around the world to support them, they really don't have the regulatory rights to do that unless the regulator turns around and says we're suspending those regulations for the period of lockdown or the period that we consider fit. So, yeah, governments and, again, things like the Bank for International Settlements and the advisors to any committee on Basel have got to step up and change conditions.
Jim, earlier you talked about how it is not about demand, but demand does matter, doesn't it? I mean, China pretty much back in operations, but there's no demand for the products, demand for services. In fact, when you take a look at the airline industry, it's just back at about, 30% of pre-COVID-19 levels.
No, absolutely, demand matters, Haslinda. The problem is that there can be a lot of demand for airline seats at the moment, but there's nobody flying. And there's a lot of countries that won't let airlines land. There might be a lot of demand for hotels in Bali, but how do you get to them? So, it's also, and much more importantly, a supply shock, which has, as I said, been imposed on the global economy. Yes, there will come a point where the demand has to be regenerated, but at the moment it should be all about supporting business and trying to keep the capital structure and the business structure that existed before the crisis hit in place, so that when the lockdowns stop, we can see a resumption of demand and a resumption of activity much more quickly. If that doesn't happen, then of course businesses will have disappeared altogether. And it won't matter how much demand there is, there won't be any supply.
Jim, there is a question from a viewer here, and the question is, what happens to all the debt that the governments incur to stop the businesses?
Yes, well, this is, in a sense, the only way that the whole crisis is anything like wartime. this is a silent economy rather than a war economy, but at the same time, debt is being built up by governments and accumulated, unfortunately, by companies as well. What has happened in the past and in the Second World War was that debt to GDP ratios went to as much as 200, 250%, which is a long way from where we are just now. But in the aftermath of the war, they came back down very, very quickly. And part of the reason for them coming back down quickly is, of course, that growth recovers. We're going to see a big build-up in debt and debt to GDP ratios, partly because the denominator, which is nominal GDP, is going to fall while the debt rises. That's going to make it look much worse than it actually is. Once we resume activity, the growth rate will go up. And what we hope is going to be the case is that governments and central banks around the world will recognise that just supporting activity resumption with a normalisation of policy is actually much more important than piling more and more money in, which might actually further distort the economy. So it's really important at this point that we just get support for businesses and making sure that the demand is there at the other end of the lockdowns.
Jim, there is a body of thought which suggests that actually recessions in the long run are actually good for economies. They sort of clear out the cobwebs. They get rid of some of those industries which are going to fail anyway and replace them with the new ones. What's your take on all that?
Well, I think that's exactly right, Rish, and it's one of the key problems that we've had since 2009. When the central banks set out to save the world at that time and cut interest rates to zero, what they effectively did was make it much, much easier for companies that weren't actually very good to borrow money and service the debt, because even though they weren't very good, they were able to service very, very low interest rates. And what that does is it depresses profitability for everybody else in that sector and that industry. So the good companies don't make as much money to be able to bounce back from downturns. The bad companies stay in business and depress profitability. So yes, the whole kind of idea of the gales of creative destruction, which has been in economics for a long, long time, really does have an important role to play. We've just short-circuited it for the last 10 years.
Jim, we saw an unprecedented slump in oil prices below zero. Could oil be pointing to a much deeper recession than what we're expecting?
I think there were unusual circumstances for the below zero price, Haslinda. That was obviously a contract expiry end, and nobody wanted to take delivery of physical oil at that point, given the glut that's out there just now. And it's really that point that when you have a complete lockdown of economies and you have a commodity that can't stop producing, you're going to get a big supply glut, unlike almost everything else where there's a supply shortage. And so we've had that supply glut in oil, and that's been reflected in the price. I don't actually think it's a reflection of the state of the whole world economy. I think it's just much more a problem of supply at a point where there is no demand and no supply of anything else to actually use the oil that's coming to market. It's an outlier, I think.
Right. What is your prediction here then, Jim? I mean, do we sort of wade through treacle for months and years after this? What's the deal?
Yeah, I mean, if you were looking at the IMF and their World Economic Outlook, Rish, you would say, oh, well, we just need to get through this year, and then next year is going to be fantastic, because they have a real V-shaped recovery built into their forecasts, looking at -3 for global output this year, plus 5.8 for 2021. I think that's way, way, way too optimistic. The problem this time round is that there's no clear springboard back to economic activity in the same way as there has been through previous crises. The Asian crisis, when countries had a collapse in exchange rates, they rebounded through huge export activity because they were cheap and they were competitive. In previous crises, there's been the ability for central banks to cut interest rates into the crisis and therefore revive certainly there are lower payment systems for people. That's not available anymore because they've never managed to get off their back in terms of interest rates over the course of the last 10 years. And governments are already pretty burdened by debt, so they're going to be reluctant once the lockdown phase is over to really boost demand further with more fiscal expenditure. So there's very little in the way of a springboard back this time. I think we're in for a much longer outturn here.
Jim, there is another viewer question for you. Do you see the fiscal and monetary stimulus in economies with a smaller informal economy than in countries like India, where the informal economy has a very large share of activity?
Yes, it's an interesting question, and here's one of the big dilemmas for countries like India. The possibility of lockdown is perhaps more dangerous and more deadly than allowing the economy just to continue, precisely because there's such a big informal sector. In advanced countries, it's quite easy for governments to identify where to channel money, whether it's through wage support or through business support. In informal sector-dominated countries, people live hand to mouth. They've got to get out and have activity so that they can make some money in order to eat. And so I don't think we're going to see as much in the way of lockdowns in the emerging markets and developing countries as we've seen in the West, which makes them, in economic terms, certainly more resilient. Of course, it opens them to the dangers of the virus, which is difficult.